Hey guys, so this is the Bearish Liquidity Model 2. We just finished Model 1. And this one is just super simple. I mean, honestly, it's pretty common sense at this point, but want to point out again and reiterate why exactly models like this are super crucial and very important to this strategy and very important to understand when it comes to trading just liquidity. Liquidity is a huge part of my trading, and I'm going to always remind you guys of that because it's literally all you need. Like, I really do not use anything else other than the facts and what I know exactly about liquidity. It's really all I do. It's really just at that point, it's really conditioning your mind and getting into that psychological part of the market, which is most important, right? We all know that trading is 80% mental, 20% skill. I mean, it could honestly even be 90% or 100% mental. It's all how you view everything. But to me, I personally think trading is 100% mental. As long as you have created a trading plan, a good system in place, and you're patient when it comes to your emotions and things like that, you'll do just fine. But we have this model here, and it's pretty self-explanatory. We have a break to the upside. Price came down, price came back up and retested, came back down, and created a low here. And this is, like I said, another bearish model. We came back up, retested this previous second high that was created, came back down, didn't break this previous low, came back up one more time before we ended up selling off completely. So in this model right here, when this is happening in live market, obviously a lot of people are going to think once this high is created, we came back down, and we have a normal break and retest here. That's 100% fine. People, are getting into their positions right here. Now, when price comes down to break this right here, we have a break of structure right here and creates this low right here. Now, when price comes up, majority of people are going to be looking at this area for another sell-off, right? Majority of the time, people are going to be looking at this. Now, when you are looking at this, this is another tricky one when you are looking at the market because this is so obvious, right? We're looking at here, and a lot of people are going to be like, this is so obvious. Why wouldn't you take it, right? And one thing that I will mention as well, it's like when you have these POY areas, they will always have a reaction. So I will say that now, whenever we have these areas right here, such as this, I mean, obviously it's not the real move that we're looking for, but it is still a POY area that people are going to be looking for reactions at. Any POY area will have a reaction. That's one thing that you have to remember too. And being that we are scalping, you're still able to take this. Like if you still see this reaction, it's a good amount of pips you want to take, especially if you're just in and out of the market. This is something, like I said, I would take. I would literally take all these fake moves within the market, but I know it's fake, right? I know that this is not going to be the trend. I know it's not going to be a trend. So I counter trend trade a lot. If I see it right away, and if it's taking a while for the actual move and overall move to set up, then I will look for a counter trend trade just like this. But like we were talking about for the first model, we we have liquidity built up right here because we obviously know that a lot of people are going to be looking at this position here. So essentially it would be a fake out. We talked about how this POY that's been touched will feed something a bit higher. So then this doesn't make this probable, like a high probable setup. So the reason why this isn't a high probable setup is because look how fast and how hard price broke down to the upside. And then price just came back up and did the same thing. But you see this move when we came down here, there was no type of built up liquidity within this move. So that would mean we're going to be taking this area as a liquidity because people are thinking, okay, I'm going to come up here and we're going to have our orders and we're going to have our break and retest and things of that nature. They're going to want to sell from this position because it's so obvious. But because it's so obvious, we know better and we have to stay patient as traders, even though we are scalpers. a lot of people assume that because I'm a scalper, I'm impatient, and I'm impatient to an extent. You still need to have some sort of patience in order to really execute on your trades. And personally, I feel like as a scalper, you you have to be on your A game when it comes to waiting for your setups and being patient, because as a scalper, you have to be a lot more accurate, right? So in comparison to someone who intraday trades or swing trades, they're allowed to have, cushion for a bigger stop loss. But that's not the same for scalpers, especially if you're dropping aggressive lot sizes. You want to cut your losses short. Like we cannot be holding drawdown. You need to cut it. If price is approaching your area and is approaching their strong, you need to cut it. You need to have something in place, whether it's an actual stop loss, whether it's a mental stop loss. I think I've mentioned this before on my Twitter that I hardly ever use a stop loss. And honestly, I don't care. I have a mental stop loss, and it's not gambling if you actually have the discipline to get out of the trade when you have to get out of the trade. You just need to cut your losses. You need to understand that. And there is a little bit more of a risk. Well, in my opinion, it's less risky as a trader, but to others, it may seem a little bit more risky as a trader because you have to take multiple positions. But you have to be willing to leave money on the table, and you also have to be willing to potentially take more losses, right? Depending on how much trades you're wanting to take a day based on scalping. Because the more trades you take, the more susceptible you can be to losses. So that's definitely on you when it comes to scalping. But we have this area, like I said, built up liquidity. There was no liquidity down here, so it does not make this POY high probable setup. It's going to fake people out, have a reaction here, come back up, and tap into something higher, and it's just going to fall. And I believe I actually showed an example of this in one of the earlier videos. I think it was the second video where we were learning how to read liquidity. We're showing a candlestick in a setup, something like this, where just above liquidity, there was a tap of a wick and we went ahead and fell. So this is kind of like the same concept to that. And then obviously you would have your positions right after that liquidity gets taken out. Same thing. Your stop's going to be at the high, and your target's going to obviously be at the low, right? This previous trading range is low. So just remember that if there is no liquidity beneath a POI, it is not high probable. It is weak. It's going to take you out. Stay patient, and remember that it's feeding into something higher. So now let's move on to bearish liquidity model 3.